Hey everyone, welcome to Unfoolish Investing, where we break down the markets without the spin, the hype, or the CNBC buzzwords. I'm Victor, and today we're unpacking a stock that soared, then sucker punched all their shareholders. That's right, SoFi Technologies, the fintech phoenix that dropped a $1.5 billion dilution bomb the second your guard was down. It's a classic Wall Street bait and switch. Or is it? Let's go deep on what SoFi just did, whether it was smart or slimy, and why this move could actually make them stronger long term. So, SoFi came out swinging, right? Blowout quarter. Revenue was up 44% year over year, hitting $858 million. Net income, $97 million. EPS, 8 cents. 150,000 new users this quarter alone. To me, that's amazing. Why? Users are sticky. They're now up to 11.7 million total members. 4 quarters of straight profitability. That's not just hype anymore. That's execution. Looking at you, Anthony. Stock soared over 18% intraday yesterday. It closed up at the end of the day only 6.6%. ending at $22.40. Investors were pumped. Reddit was flexing. This was SoFi's moment. Then what happened? They went surprise, and then they dropped it. Everyone in the front office after the bell said $1.5 billion public share offering. That's dilution, straight up. In plain English, if you owned 1% of the company yesterday, you own less today. After hours, the stock dropped 6.5%. The stock dipped to $20.94. Wall Street was not happy. Twitter, melting down. Or X, if you must call it X. It's like winning $100 on a scratch ticket and then realizing it's actually store credit for canned beans. Now, let's give SoFi credit. They played this brilliantly. They posted great earnings. The stock popped. Use then inflated the stock price to raise cheap capital. That's what they did. Again, they used that inflated stock price to raise cheap capital. This isn't desperation. It was pure war strategy. Think of it like a pitcher in the bottom of the 7th. You've got the lead, runners are on base, and you throw a fastball just outside the zone to bait a swing. That's what SoFi did. They raised a pile of cash without taking on debt. That gives them fuel for innovation, acquisitions, for expanding SoFi Bank, for customer acquisition blitzes. Sure, it stings now. I felt it, but sometimes a bruise is the cost of growth. So let's zoom out for a moment, right? SoFi isn't a one-trick pony anymore. They're a financial octopus. They're in banking, lending, investing, credit, crypto, and personal finance tools. One app, multiple revenue streams, growing user base. They're not just trying to beat your local bank or even your national bank. They're trying to replace it. This $1.5 billion cash injection might be the thing that powers the next chapter. If you're long, this could be the dip worth buying into. If you're short term, which we are not on Foolish Investors, we are not looking at the short term. But if you are, you're a little salty. SoFi pulled a fast one on you. You didn't see it coming. But if you're in it for the next 5 to 10 years, like all you unfoolish investors should be, this was them planting seeds, not cashing out. Before I wrap, let me talk about something else that's testing my patience beyond SoFi. The Red Sox. Look, I love this team, but can we please decide what we're doing? Are we rebuilding? Are we contending? Are we just vibing? We're hovering in that wild card maybe zone again. We've been here year after year. No big bats at the deadline, no major rotation moves, just vibes and hope. We're like SoFi sometimes. Exciting core, tons of potential, but then management throws a curveball that makes fans go, wait, what? At least SoFi raised capital. The Sox, they raised expectations and gave us a bullpen that throws like it's 2012. Anyway, if John Henry is listening, call me. I'll run your portfolio and your roster. One will outperform, the other might finally make it to October. So with that, yeah, SoFi just pulled a classic fintech move. Big quarter, big pop, big dilution bomb. Is it sneaky? Yes. Is it smart? Also, yes. Is it survivable? Absolutely. If you understand what game they're playing, this was not a setback. This was a setup. That's it for this episode of Unfoolish Investing. If you learned something, if you laughed, or if you just needed a Red Sox therapy session, subscribe, share, and stay with us. Until next time, stay sharp, stay skeptical, and most of all, stay unfoolish.